we're going to jump right into it. We're not going to go too fast because we want to give everyone time to get in here. But for those of you that don't know, the legend that is Chris Mahalik,
Dave Menz,
Chris Money in the house, guys. If you don't know Chris Money, which I know some of you do for sure, if you don't know Chris Money, let me introduce you to him. We joke and call him Chris Money because he's the money man. He's that's his primary thing, is he's a lender, and he's the founder of Prime Capital. And for those of you that are in the laundromat industry, which I'm guessing is all of you, the cool thing about that is Chris's organization specializes in laundromat lending. Chris, real quickly, do you want to give him a quick 90-second synopsis of Prime Capital and what you guys do?
Sure, absolutely. We finance startup laundromat owners. We finance experienced laundromat owners. We're a financial consultant, more or less, to help you get your first laundromat. We're also a consultant, per se, to help you refinance your existing laundry loans that you have. But all I do in the financing sector is laundromat financing. So I've been doing it personally for about 16 years, and I love doing it.
And guys, let me tell you something. When Chris says mentor, coach, consultant, he's not kidding. For those of you that don't know, Chris and I have been doing business together for 10 years, Chris?
It's been about that, Dave.
Yeah, yes. 10 years, a decade now. And you're not going to find, there's a lot of good people in this industry, don't get me wrong, but you're not going to find a better person than Chris. You're not going to find a more knowledgeable person than Chris. And you're also not going to find a more creative person than Chris. And sometimes we need all those things. That's how the first time we met, right? Is I had a loan that I couldn't get done. This was early on in my journey. And I was really struggling. And Chris came in, he listened to me, he believed in me, he made it happen. And we've been doing business ever since. And I've sent a lot of people Chris's way over the years that he has been able to help as well.
Thank you.
So yeah, guys, reach out to him. But at the end of the day, this isn't about me and Chris. This is about you all, the laundromat owners, future laundromat owners. And we want to bring you guys as much value.
Dave and I were talking a little bit before this call, before this webinar, and we're really, I look at us as more of like a retirement planner in the laundry industry, right? So Jeff, you mentioned in the chat here a little bit about build out costs being astronomical. Absolutely, especially with the supply chain challenges. Our passion really is just trying to make sure everybody's as successful as possible. And if you're not going to pay us. And if you don't pay us, I'm in trouble.
Somebody asked in the chat how they could reach Chris, and he put his email address and his phone number. But yeah, Chris put his, I'm not surprised. Chris put a phone number in there.
That's my cell. Call me anytime. Text me.
847-858-2718. But let's get into the brass tacks of this thing, Chris. What do you say?
Absolutely. Let's do it, sir.
All right. Let's do it. All right. The first thing I want to do, Chris, as the resident expert here today, walk me through the biology of opportunity, because you and I know, and we've talked about this ad nauseum, nothing matters if you don't have the right opportunity. I don't even care if you have financing. I don't care if you got $100 million. If you don't have the right opportunity, it doesn't matter, right? So as the resident expert, walk me through what's the right opportunity, what are the cautions behind this, and feel free to go deep. Let's give these people as much value as we can. I want us all to learn and grow from this.
So Dave, one of the things that you're doing in this industry is you are, as you say, attempting to elevate the industry as a whole. Okay. Selfishly, it's extremely important to us, because if I have a rotten egg, there's a problem and somebody's not going to pay. So one of the challenges for new owners out there, and even for existing owners, is that, there's folks right now that have money, they want to park it somewhere. If there's an opportunity out there that appears to be too good to be true, it typically is, right? And we struggle when we see opportunities that exist and the cash flows line up nicely. But like I talk about retirement planning, there's other things to consider as well. What happens when you need to replace equipment, right? So we're not just looking at an opportunity at a whole and we're trying to grind through numbers, right? For those folks out there that are working with business brokers, a lot of them are outstanding, right? They're getting the information from the sellers. They send it off to you. You review the information. You send it to somebody like us. We look at it. We come up with an opinion, right? And we lend based on our value that we value the location at, right? So what's hidden behind the numbers and getting into the actual guts of it can actually tell you whether or not you should go forward or not go forward with the opportunity. One of the things that I've seen very much recently is I've seen that there are maintenance costs that are consistently left off of these things that come in, right? And I also see when equipment lists come over to individuals, if you don't know the approximate year that the equipment was manufactured, that's going to be a challenge because your maintenance costs dictate that bottom line number quite substantially. Okay. And this is a very fragmented business, unlike a UPS store, for example, or a restaurant chain. This industry has a lot of cannibalization in it, meaning that there could be equipment distributor reps unknowingly looking across the street to build a ginormous store that dwarfs your store that you get into. There's no barriers to entry for anybody in this industry, which is a good thing, but it's also a bad thing. And when I say bad thing, that's why we always want to try to get at least like a 60-day due diligence period of time in our due diligence, not because we're trying to extend something out because we don't trust anybody, but there's an unknown that may appear during that due diligence period of time that may not present itself at the beginning of the due diligence period.
What's an example? What's an example of
an example is there's a store that had been recently closed 6 months earlier, and an existing owner knows, and you can't prove this, Dave, right? An existing owner knows, they're looking to get out of the industry. They've been doing it a long time, but they know that the retool is taking place, or there's a new development going up down the street, which, right now there's been significant construction delays because of the supply chain challenges that exist out there. So there may be a pad poured, okay, or there may be gravel put in, but the plumbing's not put in yet in a new building situation, right? And we're waiting on plumbers. That stuff will materialize, as time goes on. So for new owners and also those owners that are out there that have stores right now, it's always you've got to just think that there's an unknown that's going to present itself at some period of time that you currently don't know. So just as I get into the weeds of this, we're always trying to think, what is a possible challenge that exists here? Okay. I'll give you another example, Dave. Very common right now. There's a lot of commercial development that's not doing too well right now. Okay. Strip malls right now. There's a lot of, the restaurant industry was significantly challenged because of the pandemic, and a lot of other industries were significantly challenged because of it as well. As a result, commercial property managers are devising leases now that have a 90-day exit clause in them, which means that if a big box retailer comes in and says you have 90 days to evacuate the premises, even if you sign a 20-year, 30-year lease, that's going to be a challenge, right? So, you can't just pick up and move a laundromat somewhere else. So that's a great question. I just saw it in the chat about the strip malls for sale. I love the strip malls. I mean, I really do. I love the check cashing places. I love the convenience stores, and I love the laundromats. Again, getting into it a little further as well for first-time owners, and also as well as experienced owners. And I'll just end here and let you go on to something else here in a second, Dave, but just things that have come to mind recently and why we want to just be on the lookout is that when you purchase that property, you are stuck. It's an asset now on your balance sheet. And it is such a fragmented business that competition could go ahead and build right across the street from you. And say you have a 2,500 square foot building, right? And all of a sudden, the 5,000 square foot location goes up across the street that looks significantly better than yours. That's going to be a potential downfall. So I always say to individuals, please do negotiate a right of first refusal for the purchase of the properties. But up front, don't try to get into the real estate. Again, from my standpoint, I'm focused on the business. Oh, one more thing too, Dave, as we go through due diligence that's on my mind. We see things now that are added in, and these are clues when you're researching these actual, these financial statements that come in. I see massaging chairs. I see coin sliders. I see all these other add-ins. I see, a built-in salon in the location, built-in add-ins to these laundromats that create additional revenues. I don't care about any of those. If there's a convenience store or we sell water there, that's not going to do too much for me if there's a convenience store literally like 500 feet down the road. So again, there's clues that we look at in the financial statements that may be indicative of how successful these locations are currently and maybe in the future when you take them over.
Okay. So I know one of the things that you're, dare I say, coming famous for is saying you got to hit a home run.
You do.
You got to hit a home run on that first one. I'll let you elaborate on that. What do you mean by that? Because I agree. I think it's really, really important. And is there a caveat to it?
So I tend to be on the more conservative side for first-time laundromat owners. Okay. I have a lot of them that come to us, and what they say, actually, they're coming directly to me, and I'm responding to them. So for those of you out there that are considering a laundromat, you're going to be dealing directly with me. A lot of these challenges that present themselves is we inherently, as people, wherever we live, we think we want to get into a business. Okay. We say laundromat's our business. Well, where do we look? We look within 1 mile radius of where we currently live because it's convenient and it's easy for us. So it's easy for us to fall in love with locations and business opportunities that exist literally right around the corner from us, right? So for these owners that come to us and they give us financial statements from the brokers, they sign NDAs. By the way, signing a non-disclosure agreement is no problem for those of you out there, okay? It does cover, it's very common. It's very common. Typically the brokers are not trying to sneak something under the table. It's just, please don't talk about this, right? And it's just common practice. But we inherently, as humans, want to fall in love with something right around the corner, make it easy. You can't fall in love with the first location that you see. And most likely you can't fall in love with the first one, the second one, or any of them that you evaluate. The numbers need to make sense. There has to be an upside for you going in as a first-time owner. All right. First-time owners, and it's not about getting sold a bill of goods that's not genuine, right? It's about finding the unknown. And again, given the industry is fragmented, it's a free-for-all, meaning it's not like I said, a franchise type of a concept in many cases, right? Another location can go up right around the corner from you and cannibalize your business and significantly affect it. So from a cash flow standpoint, inherently for first-time owners, we're not looking to go in and, be aggressive with the purchase of the location. We're trying to be overly conservative to ensure that cash flow is sufficient for them longer term, and there's potential upside for the location. So let me give you an example of that. I talked about equipment replacements a couple of minutes ago, right? If we go into a location that's cash flowing, say $100,000 a year, but the equipment's 10 to 15 years old, we're going to have to replace equipment here in the next several years, right? So if we're going to put a $400,000 or $500,000 investment, capital expenditure in new equipment, you talk about the debt servicing, it's going to wipe out that profitability entirely. All right. So for first-time owners,
let me push pause for a minute. How do you calculate or quantify the fact that in most of those cases you're replacing older equipment with brand new equipment, and so that should accelerate your cash flow on the devil's advocate side of, like, we're not just buying equipment, we're not putting $350,000 equipment in a store to stay where we are. Right.
Correct. So let me give you an example of that.
Okay.
I actually love trying to go back on the P&Ls as far as I possibly can to see trends. And obviously during the pandemic, Dave, I saw, obviously in 2020, there was a drop in most businesses. Okay. Most laundromat businesses. I mean, who would have thought on a college campus having a laundromat would be a bad thing during the pandemic, right? I would have never thought that. No. Most folks, my peers, nobody would have ever thought that. So let's push that point. If I have 2015, 2016, 2017 financials because I have an overly generous seller, okay, and I look at the numbers and what they've done, maybe it's trending down, maybe it's not trending down, but that was newer equipment back then, okay? And then over the years, I see additional add-ons to the location, additional money makers to the location to try to supplement a lack of vend and fluff and fold business that's in the location. I inherently say, okay, if we go ahead and put new equipment in here and we increase the vend prices a quarter or 50 cents for putting that brand new equipment in, let's say we're going to go up 10 to 15% on overall, top line sales. Okay. I'm still calculating that in, and I'm saying maybe these individuals are selling this location because they know if they go ahead and put new equipment in here, they're back at square one where they're not making any money here for the next 7-8 years, where they're making debt servicing payments. So there's clues in the financial numbers, especially those where we can go back further, Dave, but incorporating increases for brand new equipment, larger pieces of equipment, increased VEN. You're still wanting to look at this for first-time owners on the front end to make sure, hey, first of all, Does this make sense for you? Is it going to be a prohibitor for you to be able to grow? Because one other thing is, it's not all about just getting one location and then stopping, right? If we all of a sudden have that cash flow of, say it's $100,000, and then we wipe that out right away with debt service payments, that's not good for growth. Okay. So it has to be the right owner that can take that risk, Dave. And that's more of a seasoned owner, in my opinion, to try to do something like that. The first time owner, we've got to get a home run so we can get cash flow in their pocket so they can afford the second, third, and fourth location. Right. So that's kind of what our opinion is about that.
Okay. How do you factor in the competitive landscape? Like you mentioned 10 to 15%, but
Sure.
what if it's 300%? Because I'm an example of that, right?
Yep.
I took over terrible locations, borrowed, leveraged heavily, borrowed a lot of money, put not all in some cases. In some of my stores, I did phases, and later ones I did the whole store all at once. And I mean, in some cases, we saw a couple 1,000% increase because the numbers were they were pretty low to begin with here. So how do you factor that into like the competitive landscape of what I always call the laws of supply and demand?
So you're the reason why they call you the laundromat millionaire, Dave. Okay. You were willing to take that chance. And I know exactly what you're talking about. And it made sense, right? Most individuals that we're dealing with that come out of the gates hard, okay, and are wanting to do something special, it's very challenging for them to put up such a substantial capital investment nowadays, right? We're seeing that.
Are you saying emotionally? Like emotionally, that's hard?
It's conservative, okay? Because you think about this, right? The typical McDonald's story on a yearly basis, okay? For those folks that know anything, you can look this stuff up. It's a numbers game, right? You have to have numbers. What are you going to make? $50,000 to $75,000 a year with a typical, fast food restaurant, right? You're not going to be making hundreds and hundreds of thousands a year. So when you talk about a location, Dave, certainly that's pairing up with an equipment distributor who you trust significantly and has that vision and understands that territory. Okay. We will talk with these entrepreneurs, the folks that are on the line with us today, that are on the webinar. We will talk with them, and we will talk to them about pairing up with an equipment distributor that can present that vision to first-time owners. Certainly not opposed to that at all, Dave. Absolutely not opposed to that. Okay. But it's a rarity. All right. It's a rarity for those folks, because a lot of the folks that come to us on social, they're not going to equipment distributors right off the bat. Okay. What they're doing is they're going out to the social media channels and they're getting guidance. And then all of a sudden they're saying to themselves, hey, what do we do with this? Who do we talk to? And the first approach really is they're going to business brokers right away. They're not going to equipment distributors. So
you're saying when we're stereotyping, when the stereotypical newbie comes to you with a possible opportunity, a possible deal, you're saying more often than not, they don't have a mentor, a coach, a consultant, an equipment distributor behind them navigating that.
That's correct. That is absolutely correct. And that is so substantially important.
Oh my gosh.
And also an equipment distributor sales rep as well. Don't hesitate to reach out to them as possible owners and existing owners. I want to see demographics, and I know this is exactly how you work, Dave. So let me get back to exactly, you asked me that question. What we do, and again, we're more of a take a look at the package after there's an opportunity that presents ourselves. Okay. We're not the ones that are initiating the opportunities and saying, hey, guess what? We know that there's this building here. Yeah. We'd love to see somebody build a laundromat here. Okay. The equipment distributor reps are really the ones that are great at doing that. Okay. What we'll do is we'll calculate a max spend, okay, for a particular location. So you talk about competition and you increasing 300%. You had a mentor, okay, that ran demos on a particular location and said, if you build here, this is on the surface what my numbers are saying the possibilities are, right? Exactly
right.
The difference here.
I still do that to this day. I still do that, guys. Listen to that. Right? Listen to that. Yep. This is not about Dave. This is about you. Okay. Yep. This is about you guys in the chat right now. And this is a common denominator for almost everyone that operates at the top of the industry.
Absolutely. There's no doubt about it. Absolutely. I'm glad we touched on it.
Sorry. Go ahead.
Yep. No, that's it. And, we'll calculate a max spend for a particular address. And my concern is that I like a 1 mile radius. Okay. Not in something like that, Midtown Manhattan, right? I mean, where there's laundromats all over the place. And it's certainly a different ball game down there, right? In more congested areas. But I look for these max spends based on the demographics, what it's telling me. And that's going to give me reasonable assumptions based on the competition. Okay. So yes, and most folks that are first-time owners, Dave, what they're doing is they're going to biz buy sell. They're looking online because that's what we live in right now. They're inherently not going out to, equipment distributors and saying, hey, I want to build a new store, right? Somebody's got money. They want to park that money somewhere and they're saying, I love laundries, right? Let me go out and see what's for sale. So excellent point. There's two channels, okay? That social media outlet, talking to peers, asking questions, asking folks like me, asking folks like Dave. We're more of a financial consultant once something comes in the door. But I am all about as well, for the right opportunity for an equipment distributor to present a new build, okay? An existing build and expanding it. All about it as well. It's just we don't see a lot of that for first-time owners right now.
Yeah, and let's just throw the caveat out here. Jordan mentioned it in the chat. My friend Jordan Berry's in the chat, guys. So I want to give him a shout out. I mean, Jordan mentioned it in the chat. He said, "Look, only if your distributor is trustworthy." Absolutely, guys. We're not trying to play Russian roulette here. You got to do due diligence on an opportunity, a location, a competitive analysis, and guess what? You got to do some due diligence on a distributor. There are bad ones out there. There are okay ones out there, and there are rock stars out there. And just like every rock star in every industry in the world, they're the exception rather than the rule.
Absolutely.
Otherwise, they would be considered average, right?
Absolutely. No, absolutely. And that's why, when the equipment distributor comes to us, okay, or suggests to the customer to come to us, or the customers on their own come to us, right? I may disagree with an equipment distributor, with what they say. I may be right. I may be wrong. Who knows, right? Time will tell if the project goes through. But in the end, I take a conservative approach. I'm not telling these individuals that come to the table right off the bat that they're going to get 5 turns a day. And I'm not saying, equipment distributors will do that. There are ones that can, right? So again, it gets back to the whole point, Dave, that if an opportunity is too good to be true, it is.
Yeah.
In your case, though, you had a fantastic mentor. Okay.
No doubt.
No doubt about it. Okay. So that's the dream. And I know that there's certain individuals too in the chat here that are fantastic equipment distributor sales reps as well. All right.
No doubt.
You know who you are.
Yep.
So
yeah, no, I'll point 2 things out there and then we'll get on to the next thing.
Sure.
One of them is, because I want to talk about my situation real quickly. I didn't stumble upon my equipment distributor. I want people to understand that. I want them to hear that message loud and clear. I'm not tooting my own horn, but I guess I am a little bit. I didn't know a lot, but I at least wasn't, I don't know, naive, maybe. I don't know if that's a fair word. I wasn't naive enough to just go up to just talk to any equipment distributor and be like, you're God, you know everything, tell me what to do. I at least, maybe instincts, maybe it's because of where I was raised. I was kind of raised in a rough environment and stuff. Maybe that has something to do with that. I don't know. I'm an optimistic person, but I was skeptical. And I was like, I'm not just going to do what you say. Like, you got to prove your worth. You got to prove your value to me. But I want to prove my value to you too. So I wanted to find someone that was willing to invest in me as a relationship, but also appreciated the fact that I was willing to invest in them as well. So there was this mutually beneficial relationship, just like any new relationship. When you and I first met each other, we're feeling each other out. You're trying to see if I'm a clown or not. I'm trying to see if you're going to rip me off for 10 grand, like, and never actually do a load for me. I mean, that's a part of the business process. And so there is some gut instinct associated with that, but there's also some really good resources out there. But anyway, that's 100%. The first thing.
100%, yeah. Dave, let me interject there really quick. I mean, some of the folks, it is a relationship, okay?
Yep.
You have to really enjoy and have a great working relationship with your financing investor. You have to. And if you don't, forget it. I mean, you have to have a great working relationship there. And a lot of folks will ask me, especially first-time owners, what they say to us is they say, well, you're doing all this work for us on this location. What does it cost? I'm like, well, it's going to be interest on the loan once we do business. But until we do business, there's nothing.
And that's a sign. That's a sign of a good mentor, guys. Yep. I'm not saying a distributor that maybe charges for consulting, because some of them will. I'm not saying they're necessarily bad distributors, but if you want to find a sign of a great mentor or coach, look for someone that's genuinely interested in your success.
Absolutely.
Long term, right? That's what we're looking for there. So anyway, I just wanted to point that out to people because I think it's, in my opinion, the most important relationship you can possibly have is an equipment distributor and or mentor, and they can be separate or the same, doesn't matter, but you have to invest in that relationship. Don't approach that recklessly because it can blow up in your face. And there, you know, as many awesome ones as there are, and I know there's some in the chat. The reality is there's some bad ones out there too. But listen, let's run on to the other thing because I know we're running out of time here.
Yeah, Dave, really
Yeah.
quick. Just getting back to the point of this whole webinar, right? You talk about the biology, the opportunity, the due diligence process. You just have to have that opportunity. Don't fall in love with the opportunity. That's really the biggest biological, thing from the get-go. You can't fall in love with it. The numbers have to make sense. There's got to be potential upside, and we love taking as long as possible on due diligence because things pop up. So.
Yeah, I tell people all the time when it comes to a lender, equipment distributor, whatever it is, make them earn your trust over 3 years.
Absolutely.
Now, at some point, I mean, I understand you got to like do a deal, right? I'm not saying to network for 3 years, but give them opportunities. You can call it setting them up for failure, whatever you want. Give them opportunities to let you down, and then see if they do. Yep. See if they're really in your best interest or not. And I know that's kind of a high level thing to say, but I mean, I've never felt like this was the best analogy, but when it comes to distributors and relationships and trust, I've always said like treat it like marriage. Like
it has to be.
I mean, you don't go on a first date and then get engaged. And if they try to, that's a red flag, right? Like, I mean, I don't know if it's the best analogy in the world, but I've always felt it was a pretty good analogy is take your time, but at the end of the day, you eventually got to give them a chance to burn you to see if they will or won't.
I will say one other thing too about that. Okay. When you talk about this being like a marriage, okay, it also could be like a divorce as well, because if you have a certain distributor that you're dealing with and you're buying a specific brand of equipment, and all of a sudden you're going to switch course and go buy a different brand of equipment. Some distributors say they don't take too kindly to that. So like I talked about originally, it's a fragmented business. You may have another store going up across the street from you that's a monstrosity trying to put you out of business, right?
Yep.
Again, these are just things that come up.
One of the first things my equipment distributor told me from day one, and I had no idea the value of this. I just thought, that sounds like a good idea. He said, let me tell you what I'll never do. I'll never sell equipment to one of your direct competitors, and I'll never build a store that's a direct competitor to you. Now, Steve Melman. I mean,
of course.
So that's a good sign. Now, of course, we all know they can say that, and that doesn't mean that they couldn't do it 2 years later. But you're looking for people that have that high character, if that makes sense. And this is so valuable. I'm so glad that we dug into this. This is so valuable, guys.
Dave, I said something the other day to an entrepreneur, potential laundromat owner that I was talking with. I said, and I don't remember the exact verbiage I said, but it precipitated me to say, I'll tell you what, why don't you do this? Why don't you see if that individual will sign an agreement with you for the next 10 years that they're not going to go ahead and build or sell equipment to any of your competitors in a 1 mile radius. And I said, I'm not going to predict the answer. You can go find out for yourself, but just find out, right? Mm-hmm. That's who you know who's your friend and who's not your friend, really, or your relationship, if it's a marriage or if it's or we're dating.
And then the last thing I'll say on this, guys, is when you find those rock stars, treat them like gold, guys. Treat them like the gold that they are. I, to this day, have bought probably $3 million in equipment from my distributor. I've probably spent $400,000 or $500,000 in service calls and more in parts and soap and laundry carts. Anything that my distributor sells that I need, I buy from them, even if I find it $5 cheaper somewhere else. Mm-hmm. And they know that. They understand that. They appreciate that. You can't ask them to be a rock star equipment distributor and then you not be a rock star customer. That goes both ways. So we'll leave that there. But guys, I could talk for 2 days about this because I'm so passionate about it. I literally wouldn't be the laundromat thousandaire if I hadn't found a couple key people, and my equipment distributor is one of them. Now they're a rock star, so we'll leave it at that. All right. So we're going to move on. And what I want you to do with the next few things, if you can, is take off all of your knowledge, right? Take off all your experience and say, okay, these people need to go and they need to make an offer. They found the right opportunity. What does that look like? Let's assume that they have no idea what an LOI is, or a business plan is, or a PFS is. What are the things they need to do to make an offer? They found the location that's for them, and they want to make an offer on that deal.
Yep. The business brokers typically take the lead there, Dave. So I get entrepreneurs that ask me all the time, hey, do I need to come up with an asset purchase agreement? Do I need to devise a letter of intent? I really like this. We've looked through the numbers just on the surface, okay? Some business brokers will want you to put a letter of intent up front just by seeing the sell sheet. So you'll see the top line revenues, you'll see a line item for expenses, and you'll see what the net income is going to be. Signing a letter of intent for a dollar amount that's equal to, less than, greater than, whatever the asking price is for the location at that point in time, it's just saying that I want to commit to this. Okay. That's all it is. I'm really interested in doing this. It's not tying you into anything. Okay. So I think that's a really important point, because a lot of folks have never done that. And they say, okay, where do I need to go? Do I have to have a business before I can even do this? I've never done this before. Never filled out any paperwork. I always suggest to entrepreneurs before they even, for first-time owners, okay, before they even think about coming to us and filling out all of their personal information, let's get a hit, okay? And, that's a great point in the chat here about the letter of intent. It is non-binding. So that's something to review that and make sure it is non-binding. The second step would be, and it depends on what state, but typically it's called an asset purchase agreement. And that has all the details on it, okay? So let's talk about that. You want to go ahead and put an offer in. You put an offer in with the broker or the seller directly. Okay, a letter of intent is signed. You do not have to have a business formed prior to doing any of that, okay? You can sign that letter of intent as you personally, okay? Knowing that there's going to be a business to be determined, you can put that on there. So at the time when you're actually going to sign a contract with an individual or a broker or whomever, you're going to sign as you, obviously, but also as the business, okay? Most businesses, most first-time owners will create what's called a limited liability corporation, or an LLC, right? A lot of them also they just do a single member LLC. So you know how sometimes folks fill out things and they say owner, like as their title. Okay, in the case of an LLC, you're not called owner, you're not called president, you're not called anything. You're called member, all right? In the case of a corporation, if you're the top individual, you're the president, okay? So you do not want to have just a sole proprietor on a Schedule C. But when you form an LLC and you are the sole member, you still file tax returns. You still file it on your personal tax returns on the Schedule C, but the LLC will have its own EIN, okay, which is the business identification number with the IRS, okay? So you go in to make this offer. You don't have to have your business formed. That's when all the information starts going our way. What we do is we have the individuals come back to us. Okay. You're like, okay, let's get all the stuff. Okay. And again, with the LOI, I forgot to touch on this, but I always like to say in a letter of intent type scenario, before you go to a contract phase, you want as much of a due diligence period as possible. And I always say for owners out there, I always say, I'd like a 60-day due diligence period. All right. That allows for you to go into these locations, watch the owners count the coins, or go to the VTMs. And if it's a card system type scenario, you can pull up all the data. It also, most importantly, allows for you to have more time to find a potential unknown during the due diligence period. Somebody building a new location, somebody retooling an existing location right around the corner from you. I always try to go as long as possible from a due diligence period standpoint. Now, when we say, I get a lot of questions as well from brokers and from people that are putting in letters of intent. What if I want to back out? What if I do go to contract? What's my outs, right? And I'll tell you, brokers really are pretty cool about this in general. There's going to be a clause in there that states that the contract essentially is contingent on a buyer securing financing, right? And what that means is that it has to be acceptable to the buyer. So if we go ahead and approve you or don't approve you, or or there's an unknown that comes up ultimately in the 11th hour before you're ready to close, well, guess what? It's within that due diligence period. If I find an unknown, I'm pulling out. And if it's a deal breaker type of an unknown, meaning I'm withdrawing that approval, we're both collectively going to pass, right?
Or renegotiating.
That's right? Correct. It could be a renegotiating tactic. And again, that 60 days sometimes does, when things arise like that are unknowns that we don't predict. And maybe the broker and the seller don't know anything about it. It could be, it could not be. That period of time could actually extend out a little further. We do, Dave, during the due diligence period, what's really important for new owners to get, and a lot of owners are not going to have very good record keeping. Okay. They're going to have a 1-page profit and loss statement. They may have some bank statements. They may tell you, yeah, the equipment in here is really old. We got to find out how old it is. What's really important for everybody to understand is that whether it's a cash business, okay, where sellers are not going to declare all of the money on the books, or if they have illegal workers that are in there, or they have very limited records. They do wash, dry, fold, but they have limited records there. There's always a way to find out how well the location's doing. And really what's most important for me is I like to do a demographic analysis of that particular location to find out what the actual spend on the vend is for a 1 mile and a 3 mile radius. Okay. Mm-hmm. I can then form a vision and say,
hold on.
Go.
Explain what you just said.
Okay. What I mean is that I want to see, all right, based on the demographics that we're going to pull, mm-hmm. I want to see within a 1 mile radius what the opportunity is for laundry spend.
How do you calculate that?
Well, that's my secret sauce, but I can tell you, right?
I'd have to kill you.
We take it. I'm not going to go through my details on this, but there is a secret percentage. Okay. We're going to look for certain income earners. Okay. Certain income levels. And it's actually in the demographic analyses that we pull and what the equipment distributors pull. There's actually a very unique number that's in those particular income earners. There's a certain income level. I'm looking for everybody below that income level. All right. Mm-hmm. It's not standard out there in typical census data that you'll see online. Okay. Mm-hmm. In those scenarios. I'm also really looking for percentage of renters and what the opportunity is for percentage of renters. Okay. And essentially I'm taking the renters, I'm taking the income earners, and I'm coming up with what I feel could be a capture rate based on that 1 mile radius. Okay. If there's 3 laundromats in that 1 mile radius, I'm dividing it by 3 ultimately. Okay. Mm-hmm. And I'm basically saying this is what we should be doing right now. Here's the opportunity. In your case, okay, when you talk about a new location, you go up 300%. You probably saw those numbers and were like, you got to be kidding me. I mean, this is a no-brainer. We've got to do this and put in a new location, right? So coming up with those demos is extremely important to try to find out what that spend is. Now, if the levels are below what I'd like to see and we're underperforming, is new equipment all of a sudden going to make this thing a complete winner? It very well may. All right. That's when we need to look further out and find out what else is around the area to find out where are these folks going to do laundry, because everybody has to do laundry. Okay. Mm-hmm. So that's really important to try to get the demos. I need at least 12 months consecutive utility bills, water, gas, on the supply side, on the distribution side, and electric, to try to find out what those utility bills are for an entire year period of time. Mm-hmm. That's important because in card store scenarios, there are still sellers that exist out there, Dave, that will run their machines at night purposely, mm-hmm. with nobody there, to try to generate more utilization of water. Okay. Mm-hmm. And they're going to try to make their machines seem like they're running much more, but they're not actually generating income. That's coming up later. Okay.
Yep.
But we do need the utility bills. We do need the equipment. Okay. The specifics on the equipment. So what's really important is the sizes of the equipment, whether it's 20-pound machines, 30-pound machines, 40-pound machines, 50, 60, 80, whatever they may be, the mix of those machines, top loaders. Okay. Soft mount, front loaders. That's really important. We also like to know the year of manufacture on the machines. Now, if I can't see a serial number, or if nobody can tell me, that means it's old. Okay. Because I can still go in with certain manufacturers and I can see, okay, this thing's 10 years old. I can still see these serial numbers in here pretty good. Okay. But in the end, I've got to have the specifics on the equipment. So we talk about clues and we talk about that biology of the offer. Okay. If we get the equipment's it's like 10, 12 years old. Okay, folks, that means it's 15 to 20. Okay. And we've got to calculate. I talk about potential upside. Again, in our analysis, we're calculating if we put new equipment in here, what's this going to do to our profitability in longer term? How much upside can we have? There's got to be upside, especially for new owners. Okay. So we're going to ask for VTM information, like at the fluff, dry, fold. Okay. You're going to have a register that's going to have some data on it when folks are doing drop off, pick up and drop off business. I want that data, right? And I'll tell you what's not one thing that's not a prohibitor for you. Distributor sales reps know this out there. It's not a prohibitor at all. If I have written records on notepads, okay, rather than getting a profit and loss statement, I love it because I know it's genuine. Somebody's not going to, and especially if the ink is in different colors and we're using pencil one day and we've got, blue ink one day, black ink, they're just picking up a pen and writing down numbers, what they're doing on a daily basis for the fluff and fold, for example.
Some of the most accurate numbers.
They're some of the most accurate. Absolutely. So I love that. So if we get basic numbers, if we get, the specifics on the equipment and try to back into the ages and get some serial numbers, if we know what the VEN prices are, if we get the demos, we can come up with a reasonable number in terms of where we think the laundromat is. Now, 9 times out of 10, folks, it's going to line up fairly well. And a lot of the owners are not going to make up their numbers. They just may be bad numbers, or they may leave out maintenance. They may leave out employee expenditures, sloppy. The bottom line is I'll add back all of the owner benefits to the seller's benefit and be fair. And I will get on the phone with the sellers and I'll say, please tell me there's more money that you're pulling out of this location somewhere, right? Because I want the seller to be happy too. I don't want to get the seller upset. If it's a good closing, it's good for everybody. Okay. So, but again, I'll add back all of those owner benefits and ultimately I'll come up with a number and I'll say, this is what you should offer on this location. Again, my opinion, I'll go through. And again, sometimes I don't know who, other folks out there, they may say, hey, this is what I value it at. I'm going to tell you exactly why I value a location at what I value it at. Right. And I have no secrets. I'm going to tell you. And if there's something else, please tell me. What am I missing? Right. So that's kind of it. And for first time owners too, we don't fret, don't freak out if you don't have a business, a business plan. We'll help you craft the business plan because we're going to see opportunity in the demographics, in the competition. You're going to go to all the stores in the area and you're going to find the competition. You're going to sit in the stores. You're going to see how many people come in. You're going to learn about them, right? So, we'll help with a personal financial statement. Really, in the old days, what we asked for, we asked for a 1-page application, from a financing standpoint. We ask, and again, don't have to have the business entity created. We ask for last 2 years personal tax returns, okay? And really, most people qualify. We used to say that we want 2 to 3 times net worth of the dollar amount that you're borrowing. So what that means, everybody, is if you want to borrow $200,000, we'd like to see you have a net worth, meaning assets, okay, of anywhere between $400,000 and $600,000. The days of that are kind of gone because I have individuals that come to us that have just recently got out of school, folks that dropped out of school, for their own reasons, folks that have been in the business for a long time doing something else and they want to get into this, but they have no prior business ownership experience. I mean, in certain areas of the country, you don't buy properties, you rent consistently. Home ownership was really important in the past. But nobody's really excluded. We're really concerned with liquid assets to be able to put down the required down payment. And on any project from an acquisition scenario, we typically finance 75% or 70% of the acquisition, and you put 30% down, okay, up front. So what that on $100,000, for example, you'd put $30,000 in, we would finance 70. But what's also important about that $30,000 is we don't want that to be your life savings, right? We don't want to make you cash poor right off the bat. So maybe it's not a $100,000 location that we're looking at. Maybe we're looking at a $75,000 location because once you get in, you got to have some liquidity to make sure it's good. In a scenario where we're replacing equipment, we finance the equipment at 100%. So if we find an opportunity, say it's $100,000 and you're putting your $30,000 in, we're going to retool the store. We're going to finance that equipment at 100%. Okay. New builds, typically we finance 75% of the project cost, and that typically means that you're coming up with the build out expenditures out of pocket on the front end. We're financing the equipment. Okay. It doesn't always line up that way, but absolutely interested in new builds, Dave, to your point, a complete rehab, totally interested in that. Additional items that we request, bank statements. Okay. Really, if you're not late on a mortgage or a home equity line of credit or have massive amounts of credit card debt from the last several years, you're fair game to talk to us. We put a lot of emphasis on the opportunities, on the locations, and the potential upside for all of you out there.
Mm-hmm. I think it's important to point out to people, because I'm guessing that some of the people that are watching this right now are kind of feel like they're drinking through a fire hose. And guys, you probably are. And we've all been there. And it's why people like me and Chris and others in the industry that care about the industry, it's why we're always cautioning people to find great mentors. You can't possibly learn all this in like 2 months. Like, I mean, it's too much information, and you certainly can't learn this stuff by posting 6 times on a Facebook group. And I have a Facebook group. I love it. It's a great resource. But guys, we have to approach this like professionals. So sometimes that requires taking our time. If you happen to find an amazing mentor, then maybe you can move faster. If you happen to have a tremendous net worth or previous business experience in another industry, yes, all those things can accelerate the process. If you don't have any of these things going for you, then you got to take your time. You got to take your time. This is an art. It's not a science.
So I'll tell you,
that's really important for people to remember.
Yeah, Dave, in what you talked about right there, just what I was talking about, precipitated conversation in the chat, right? Yep. And the bottom line, like a couple of great questions, like how do you protect yourself taking over a location with the labor aspect of things? If you're, a lot of owners, what you do is you make them sign a hold harmless clause is what it amounts to. Okay. And your lawyer will talk with you about that, but that's something we identify during the due diligence process, not your problem. Right.
Yep.
And it's really important not to, in my opinion, work directly with a seller unless a lawyer is involved, because there has to be lien searches done on the locations. There may be things, the unknowns from that standpoint. You assume everybody pays their bills, but they may not, right? Absolutely. Real estate taxes. I mean, there may be things behind the scenes that come up. So we talk about, non-compliant wage hourly workers. I mean, that's a great question, James. Bottom line is you can't account for that. That's got to be a payroll liability that exists in the P&L. And just because you're paying them cash doesn't mean anything. It's still going to be something out there. It's going to be part of the overall equation, but that's their problem, okay, to deal with. All right. I never suggest when buyers take over locations, keep that labor there that's already there. Only because nowadays it's very challenging. We have taxation related issue, payroll tax related issues. The whole thing in this industry here too, with regards to labor, when you do that, do you 1099 employees or do you make them W-2, right? So there's a whole bunch of questions there that we can go on tangents with. Another thing as well, there was another thing too, like the assets and liabilities Steve brought up here in the group chat. That's really important. Ask us, okay? We're most concerned from a personal financial statement. If you have 10 Maseratis, 15 Ferraris, that's great. I really don't care about any of that. Really, I'm looking for liquid assets, okay, and investment statements. I don't care primarily how many, if you have rental properties, great, but we don't need to list out every single rental property in the PFS. We just need to know, okay, what's the value of the ones you own? What is the liability, meaning the mortgages on those properties you own? And what's the income you're bringing in on a monthly basis based on those? I don't care about the actual occupancy rate, really. So you see a 4-page personal financial statement from us and you go, my gosh, you got to be kidding me. I mean, sometimes it's necessary to break that stuff out, okay, when you're talking multiple businesses that are owned. But in the case of a first-time owner, let's keep it simple. And if you have questions, come to us. We'll help you put it together.
Yeah, I think if we could close this webinar in any one thing from my perspective, and then I'll give you a quick second there, Chris. What I would tell people is approach it as a professional. Now, I wasn't a professional, but I approached it as if I was, meaning I didn't do anything without an attorney giving me the rubber stamp of approval. Now, did I pay a few $1,000s for that? Yes. Is it easy for me to sit here today and say, well, yeah, Dave, but you're a millionaire. It's easy for you to spend. No. But the message I want you to hear is this is how I became a millionaire. Okay. This isn't what I do now that I am. This is how I got from where I was when Chris met me, which was probably a negative net worth, to where I am today. And that's why I always tell people, if I can, you can. Because you may be in a better situation than me. You may be an attorney. Okay, great. Maybe your aunt is a CPA. You need to build a team. And the thing I'll add is even paying those things out and building that team, bringing on a great equipment distributor, investing in the due diligence of getting to know them and seeing if they're a rock star. These take time, they take money, and they take effort. And that's what separates the contenders from the pretenders in this industry. I had a coaching client come to me, and he was a very, very sharp individual, very, very sharp. Made over $300,000 a year at his W-2 job. He was an IT guy. He was no dummy. And when he came to me 6 weeks after he had bought a laundromat, he had paid $650,000 for this laundromat that was maybe worth $200,000. He came to me 6 weeks after he closed. I mean, it's crazy, guys. This is real life.
Yep.
It can happen. We don't want it to happen to anyone, but we can't control other people. But you took the time to come on this webinar today and learn, post great questions, things like that. We could go on for hours about this stuff. Chris, what do you have to close this out today?
Yeah, no, and just answering Rahul's question, it's a great one. And hi, Rahul. I know exactly who you are. One of the things that's interesting about this too, it's a great question, front end costs, right?
Yep.
So if we don't ever close anything with you, you pay us nothing. Okay. Mm-hmm. But there is a 1% acquisition fee. That is our fee ultimately for closing out transactions. Okay. So if it's a $200,000 deal, you do the math, right? A couple $1,000s. In the end, that's your financing fee ultimately. And that's standard throughout the industry, whether you're financing through us or anybody else, that's standard in the industry when you're taking over that. What Dave said about legal, a couple $1,000, you're going to want to get somebody involved to review the asset purchase agreement when you go under contract with the broker. You're also going to get their assistance as you're forming your LLC or corp, or I don't advise C corps, S corps if you want to do that. But there's no other fees outside of that. Okay. So, we always want to have at least a 10% buffer in terms of dollars for individuals. If they're going to be purchasing, a $300,000 laundromat, I want to see when it's all said and done that they've got $30,000 as a buffer just to be safe. And that is an extremely conservative buffer. Mm-hmm. So anything. Oh, and Dennis mentioned too, Dennis, you mentioned long-term lease. You're spot on. Okay. Yep. But talking further, I mean, I love 20-year leases, and I don't care if the initial term is 5 years and then we go, 5-year options. Okay. That doesn't matter to us. With the leases, and Dennis, in your state, that's really important, with these strip malls. If there's a big box retailer that comes in, we're in trouble. We can't have any 90-day exit clauses in these leases. Mm-hmm. But anyway, Dave, I'll leave it back to you.
Yeah. That lease goes right back to that attorney, right?
Absolutely. Absolutely. The attorneys have to review these leases. No doubt.
Absolutely. Absolutely. Listen, guys, Chris and I, we thank you for being here today.
Absolutely.
This is how I became a millionaire. It's not what I did because I was a millionaire. I think a lot of times people misunderstand my message because they say things like, well, it's real easy for you to say you're a millionaire. And I want people to understand that I started out bankrupt. Like 5 years before I got into business for myself, I literally was bankrupt personally. I had to dig out of that bankruptcy. I had to build my credit up. I went through a rough divorce. I got remarried. These are all parts of my journey along the way. When I started, I was broke. I mean, when we bought our first laundromat, we had a net worth of like $40,000. And by the time we borrowed some money,
this is it right here.
That's right. If nothing else, guys, go spend $20 on my book, and not because
awesome.
Not because I'm trying to make money on my book, because I'll never make money on my book. Trust me, the amount of money I spent. But my whole journey is in that book. And it's broken down for you in a very actionable and practical way. And I wrote that book for you because I don't want you to buy a $650,000 laundromat that's only worth $200,000. I don't want you to buy a $200,000. I want you to hit a home run. That's who me and Chris are. That's why we're here today.
Absolutely.
So anyway, yeah. Listen, guys. Yep. Listen, guys. We're going to let you go for today. Check out the other things that Chris has going on over at govprimecap.com, which is his website. Go check out my website, laundromatmillionaire.com, and we'll see you guys next time. Take care out there.
Thank you, everybody.